Let's take a look at markets here. 10-year Treasury yield this morning is trading around 4.5. Well, it's actually below. It's at 4.46% right now. That is up 1.1 basis points. Futures market now pricing in a nearly 68% chance that the Federal Reserve will cut interest rates in September. Former Soros Fund Management Chief Investment Officer and Key Square Capital Management CEO Scott Bessent is out with a new op-ed on foxbusiness.com. He writes, Fed Chairman Powell finds lowering interest rates too easy to swallow. He writes, Powell has been, quote, so eager to take credit for engineering an economic soft landing that he's made one much harder to achieve. His prediction that the next move in interest rates is likely down rather than up perpetuates his mistake. A little more restraint in recent months would have served the Fed chair and the economy much better. Scott Bessent joins me right now with more. Scott, great to see you. Thank you so much for being here.
Good morning.
You make a great point because the Federal Reserve basically choreographed this for everybody, right? There's a reason that the market was expecting six rate cuts at one point because that's what the Fed was signaling. Why?
Maria, I'm not sure, and good morning, I thought that the Federal Reserve had, after a disastrous 21, failing the American people on inflation, the Federal Reserve restored their credibility with one of the fastest, if not the fastest, hiking cycle in history. It looked as though they had things under control this fall. Inflation was dropping. In the November and December post the FOMC meetings, the statements were very anodyne, and for some reason, Chair Powell needed to come out and play the hero and signal an easing. And, my theory, and it's been borne out, is, he calls this easing in financial conditions, stock market shoots up, credit spreads tighten, and, that reignited inflation and reignited the economic activity. And now, 6 months later, we're seeing the results of that. I think if he had just stayed the course, things would have been, the conditions would have been much better. And the other thing we're seeing here is we're seeing this bifurcated economy, and that behavior in the late fall has led to it. Is 25% gain in the stock market is great for the top 20%. Interest rates staying high is crushing the bottom 50.
Yeah, exactly. And that's why Nancy Lazar is calling this a bifurcated situation. But even more than that, Scott, I'm wondering if we actually have seen the impact of 11 rate hikes so far. The other day I was reading a report that said, look, this takes time. We may not have even seen the true impact of 11 rate hikes. Certainly we've seen it in some interest rate sensitive areas like housing, no doubt. But have we seen the impact fully yet? And isn't it too early to start saying, well, we raised 11 times, let's start cutting now?
Again, the Fed was trying to reestablish credibility. Given that they've been wrong for 7 quarters, I don't know why they wouldn't have taken out more insurance, adopted a wait-and-see attitude. And, I think if I were especially one of the hawkish members on the FOMC, I would have been quite disappointed in Chair Powell's performance. It was kind of needless and set back their progress.
Yeah, and in fact, you write that this is a failure of central planning and that Jay Powell and Janet Yellen have been reckless. In fact, they are putting politics in everything. I want to ask your take. I want to get your take on this Janet Yellen speech in Arizona the other day. But first, let me give you Jim Grant's opinion of where things are going, because he is in the camp that you are saying this is all political. He says Jay Powell was political, calling inflation transitory, and remains political. Watch this.
I believe that the Fed itself regards a potential second term for Donald Trump as a clear and present danger to the country.
So that's why they'll get involved.
The Fed is politically very much aligned with the Democratic Party. I think the Fed, without even perhaps realizing it is doing something in the way of a political move, would be inclined to read the numbers in a interest rate reduction positive way, with in the back of its mind the threat of another Trump presidency.
Scott, this is not the way things are supposed to work. And Treasury Secretary Janet Yellen also getting political in a speech in Arizona last week, arguing that threats to democracy risk economic growth and an apparent jab at former President Trump. Watch this.
I admit this doesn't seem like typical terrain for a Treasury Secretary. But democracy isn't just important in and of itself. I believe that democracy is critical to building and sustaining a strong economy. Undercutting democracy undercuts a foundation of sustainable and inclusive growth.
You know, Scott, maybe it's a good idea for these guys to get out of politics and start just focusing on economic growth and getting inflation down. Your reaction?
Yeah, so Maria, this is my 40th year in the investment business, about my 30th year as a macro manager, and there's always politics around the Fed, Treasury, but I've never seen it to this degree. And I'll tell you, Professor Yellen is very disappointing here. And if we just look at her speech, I think the speech is flawed because she analyzes the product and not the cause. And the real cause of lack of democracy is typically economic chaos, whether it's the French Revolution, the Russian Revolution, Weimar Germany. So it is a steady economy with a happy, well-fed, and well-looked-after population that yields the good democratic outcomes. And I think we're getting the opposite of that. We're getting this kind of central planning that, it didn't work in the 60s. I think it's very interesting that Professor Yellen's mentor, James Tobin from Yale, tried the same thing in the 60s. It failed, led to the great inflation. And, the 60 years on, we've got a redux of this.
Unbelievable. Let me ask you this, Scott. The Wall Street Journal, of course, reported last month that President Trump is looking at some high-profile Wall Street D.C. veterans for the Treasury Secretary job. According to the Journal, you co-chaired that April 6th event in Palm Beach, and you have caught Trump's eye. I'm not going to ask you specifically if you are going to be our next Treasury Secretary, but let me ask you this. Should you find yourself in such a position, what would be the most important policy change that you would want to make for this economy to actually see some economic growth and inflation coming down and wages going up? What's most important in terms of policy right now, Scott?
Yeah, I think Treasury and the Fed have got to reestablish credibility. And, the credibility gets established by actions, not words. Professor Yellen is very tricky because, she speaks softly, but then you look at her actions. We've had a Treasury takeover of the Fed. They've shortened and eliminated a lot of the coupon issuance in favor of bills, which has caused an easing. But look, we've got to get this budget deficit has to get under control. 7% during peacetime or non-recession, we've never seen before. And we've got to get back to supply side solutions. The reason this inflation hasn't been transitory is under President Trump, the Trump tax cuts were a demand shock to the economy, but they were met by a supply response in deregulation.
Yeah.
With the Biden administration, we've had this incredible burst and unhealthy burst of federal spending, and that's been met by supply constraints in the form of overregulation. So, that's why we keep getting these bursts of inflation, and why, unless there's a change, it's going to keep happening.
Scott, the way that Secretary Yellen has set up these auctions, is she trying to make stocks go up and keep yields lower? I mean, is that why she's setting up short-term funding versus long-term?
Yeah, and again, it's very disappointing, Maria, because Treasury and Fed, the economic positions in administration are risk management positions, and she is adding risk, not mitigating risk. And this is a risky strategy. We now have this EM kind of equilibrium. And look,
Yeah.
you know, over 40 years, I've seen developed markets, emerging markets, and this never works.
All right,
You know,
Scott.
she's got a three-body problem here. So
Right, we got to
yeah,
jump.
So
but
she's trying to goose financial conditions.
Scott, real quick before you go, have you had discussions with President Trump about being his Treasury Secretary?
You know, Maria, I think that everyone should focus on getting President Trump elected. Just like we have a two-tier economy, we got a two-tier legal system that you just talked about.
Yeah.
And we got to get past that. We got to get to the election, and then you know, people can talk about jobs in the administration.
Scott, good to see you this morning, sir. Scott Bessent joining us.